Its listing of Indian startups was much in focus last year, but within months of lofty valuations of many of them, they have crashed now. One among India's most valuable startups, Byju's, it's valued at $22 billion, but recently it reported loss of 4,500 crore rupees or $575 million for fiscal year that ended on March 31st, 2021. It's 19 times greater than prior fiscal. Byju's also delayed release of its audited financial accounts until September this year. Indian stock market regulator SEBI, it has already sought startup valuation details from Indian PE and VC funds. Important point to note here is that most of these businesses are real. There are genuine cases where businesses have potential of scaling up and be profitable over a period of time, but much of it had to do with plunging of stock markets as well. And today, to talk more on this, we are joined by Mr. A.K. Prabhakar, Research Head of IDBI Capital. Good morning to you, sir. First of all, I would like to know from your side, these valuations were clearly in question earlier. Now, what is your take now? Where are we headed? Are they still overvalued? And what about the investors' wealth, which is in these stocks?
Yeah, good morning. See, we need to understand these startups are not for retail investors. These are for institutional investor or people who have 10 years, 20 years view. Because, many listed companies, they also don't know when they will make profit. It can take 5 years, 10 years. Sometimes competition is very heavy. Maybe, in their lifetime, they might not make profit. So, no, it is not something where retail investors should participate, and that is the first mistake they have done. And the valuation in which many of these companies have come to the stock market was something, they use the bull market in Indian markets to come, and now all the investors are paying that price. There are few businesses where they operate on a very thin wafer margin, and even at current valuation, it doesn't look attractive. So I don't want to go deep into the stock, but now many stocks, even after correcting 50-60%, I don't think they give value to the investor even if they buy now, because the turnaround process will take another 5-6 years.
Mr. Prabhakar, now SEBI has also sought details from these VCs, like venture capitalists and other institutions that valued them. So you think that there was something missing in their valuations as well that led to hyper frenzy and people subscribe to their IPOs?
Yeah, I feel so. See, when there is when you have listed companies or competitive companies, which were already listed at an attractive valuation, why would somebody pay for some startup at a crazy valuation? The only story was Amazon also at one point of time was a startup, and today the valuation is so good. But they came at very attractive valuation. They understood where they were. And only institutional investor invested, and it was a process. It took almost 20 years, 22 years today for where Amazon is, and you cannot expect the startup to stand up in their own feet and walk or run. It will take at least 10-15 years, and that is not for retail. So there should be a clear demarcation so that retail understands what is the risk factor in these startups.
But Mr. Prabhakar, overall market even has come down drastically from February to now. The markets have also, Sensex Nifty, both are down as compared to last year's levels when there was frenzy and the markets were bullish. Can't we attribute this fall in this valuation of these startups to fall in stock markets also?
See, all-time high in Nifty is 18,600. Today we are at 17,500, which is hardly 5% correction. Whereas the startup thing is more than 60% down or 50% down. So I don't think that is a right way to compare. Whereas Bank Nifty has made an all-time high. So there are few index which has done very good. There are few index which has not done. But if you take the broader index, which is Nifty 50, then it is only 5% down from the highest level. So I don't think the market has recovered from your February or other lows, and that kind of recovery we have not seen in these startup companies.
One last question to you. How do you compare it vis-a-vis the global stock debuts or IPOs that happened last year? Is there a similar problem there as well? And Going forward, what would happen to investors' wealth now, and should they remain investors in these stocks?
So, globally also when, these kind of bull market comes, your valuation is always expensive. People rush there. But, everyone learns their lesson by a hard way. That is what is happening globally, or that is what is happening in India. But, if you are a safe investor, invest in stock which are having a consistent track record. IPO or new issues are not for retail investor. It is for institutional people who have a higher gestation period. Retail investors should know what is their risk and what is their reward. There is nothing called free meal. So that if they understand that, now there are a lot of companies which are already listed, which have 10 years track record and profitable track record, and that is where they need to go.
Alright, thank you, Mr. Prabhakar, for joining us this morning and getting us all these important details and perspective on this valuation story, where many of the startups, they haven't lived up to the hype they were making till last year. WION now available in your country. Download the app and get all the news on the move.